watchers and DecisionPoint faithful, welcome to this Friday, August 23rd, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right, well, kind of an interesting day in the market today with the Dow falling well below 2%. I think we had almost 3% loss. Yep, on the NASDAQ, 3% loss. Quite the day today, Dad. What were you thinking about it?
Well, yeah, and again, though, for the week, we had an update on Monday, so for the week, the net change was like 1.3% down, something like that, 1.4% down. Mm-hmm. So in the longer picture, it wasn't as bad as it looked.
Right, or felt today, yeah. I suppose. Okay, well, what are we going to be covering today? Broad market indexes, of course, and I look at the price relative to the S&P. I thought there was some interesting information on that chart. Weekly review, we'll look at the scoreboard indexes weekly charts, and we'll talk about the sectors as well, the sector scoreboard. Decision point indicators, we're going to run through those for the S&P 500, but I also thought I'd concentrate just a little bit on the Swenlin trading oscillators for some of the other indexes that we have available to you on StockCharts.com. Then Carl's going to cover the big four, dollar, gold, oil, and bonds on a daily and weekly basis. And then, of course, our bonus charts are Carl's grab bag, so stay tuned for what he's going to pull out to surprise everybody today. All right, so let's go ahead and we'll look at our decision point scoreboards first and foremost. As you can see, we had quite a few signal changes today on the S&P 500, 100, and NASDAQ 100. The PMOs on those weekly charts did cross below their signal lines, so that gave us these sell signals in the midterm for the PMO. We did also note that last week we had already come in with that sell signal on the Dow Industrials. We just hadn't had the others catch up. And then also the last one to give up its intermediate term trend model buy signal was the NASDAQ 100. It gave it up today. And so now we're listing a lot more red and neutral gray on here. The only green left right now is on that long-term trend model, and that really is determined by a golden cross, the 50, 200-day EMAs having a negative crossover on those daily charts. And we are still pretty far away from that happening. So we'll have to keep a close eye, though, on those charts. As far as the sectors go, we're starting to see them flip over to the red. We have the newest one is a neutral signal on the comm services spider. And the neutral signal was generated today when that 20-day EMA crossed below the 50-day EMA. And that all occurred, though, above the 200-day moving average. So we went into a neutral position, which is more cash or fully hedged rather than a sell like we were on here for energy and have been for quite some time. That would be a little bit more risk on for you. All right. Yes.
We put the neutrals in red because they're actually a soft sell signal, meaning the instruction would be to close the long position and go to cash or
exactly,
as you said. Notice that also the percent of sectors that are bullish in either case is 36%. So
right.
It's way down there.
Yes, absolutely. Seeing these when they start to turn, we had green pretty much on all of these sectors except for energy, and we just continued to start adding these neutral signals in. The only ones right now unscathed are, three of the defensive sectors, consumer staples, utilities, and real estate, all defensive, and they are still on buy signals. And technology still remains on a buy signal, but it does tend to outperform the market a lot of times.
Technology is the next one to go.
Yes, it's very, very close.
Very close.
All right, so let's go ahead and I'm going to pull up some charts for us to look at. I'm going to start with the relative chart. So this tells you how well these broad indexes are performing against the S&P 500. So for example, just because the Dow is showing a move to the upside, that doesn't mean price was moving up. As you can see, it truly wasn't. It just tells you that as far as the losses, it was not falling as fast as the S&P 500. So relatively speaking, it actually gained a little ground on the relative strength here with the S&P 500. Everybody else, really performing about the same as the S&P 500. OEX maybe a little bit here to the slightly moving to the upside, but I wouldn't count on that as anything great at this point. Broad market indexes, just looking at all of them, the price charts, and you can see that S&P 500 equal weight, RSP. Hang on here, just try and find my my cursor here so you guys can see what's going on. Oh, well, it'll appear. It eventually does. The S&P 400 and the 600, you can see well below those all-time highs that they hit back in 2018. Still haven't even come close to attempting to challenge them, unlike, of course, the S&P 500, which has continued to make those new all-time highs, although it's been a long time since we saw them. Oh my goodness, I can't figure out why my mouse is gone. Oh, there it is.
There it is.
Yeah, it's really hard for me to navigate if I don't have that. All right, the global indexes at this point. This is telling you, how we're faring, or how the world is faring against us. And really the main point on this chart is that we're still seeing declining trends in the German DAX, the UK. We're getting a little bit of movement here on the French CAC, but not that much. The Nikkei, it's still in a declining trend, and I've actually moved as far as India's. I looked at their last all-time high, and I started drawing in this declining trend line there. And then, of course, Shanghai hasn't seen all-time high since the beginning of 2018, and we've continued in a declining trend since then. But let's go ahead and start looking at some of our charts that are a bit more interesting, maybe. The Dow Industrials, I'm going to start there. We did get that intermediate term trend model neutral signal that came in. The other thing I'm going to point out, you'll notice on most of these, I think actually all of these large cap indexes, we're seeing PMO tops below the signal line. That's just, you don't really want to see that kind of thing. The OBVs don't look that bad because we are seeing rising bottoms on them because we did have all these up days with that, the down day, of course, that popped in there in the middle. But if you look just at the volume pattern itself on this rally to the upside, we were seeing volume decreasing, and that you don't want to see that.
Also, the OBV, actually, you've got a reverse divergence there. Notice in the month of August, we have two price tops, and in comparative, we have a higher high in the OBV than the prior high was. It really wasn't a high on the OBV at all. But so we've shown a lot of volume being expended to the upside, but it's no.
Yeah, it hasn't done much.
The OBV is, from there. There you've got moving higher, and but it's not pushing price up. So that's a reverse divergence, and I like those. I think they're more reliable than negative divergences and positive divergences.
Right. And when we say a reverse divergence, it means that you're looking at these rising tops, you're seeing volume increasing, and then as Dad said, you're losing the price tops. You're not gaining higher highs like you should be. And so that tells you, like you were saying, volume isn't pushing price, and price is supposed to follow volume. And if it isn't, that can be a warning sign. All right, the weekly chart for the Dow, as you can see last week, we had that PMO sell signal come in. I'm looking at this rising wedge. We had already tried to execute it last week, but we did close really right on that rising bottoms trend line. This week, however, we're well below the 43-week EMA. And of course, we're breaking down and out of that rising wedge. All right, NASDAQ 100 has performed a little bit better, but you're seeing a top again below that signal line. And notice the difference. We were talking about that negative divergence on, or I'm sorry, reverse divergence on the Dow. And on this one, you can kind of see a confirmation.
It's confirming you have lower tops on price and you got lower price tops on the OBV.
Exactly, confirmation. And this is not a good sign. That rising bottoms trend line broken, but notice the 200-day EMA is holding up at this point for the NASDAQ 100. And then another rising wedge, and there's that new PMO sell signal. S&P 100, very similar look. Notice though that we've lost the 200-day EMA multiple times on the S&P 100. Again, another top below the signal line. And I believe we still have a rising wedge on this one as well. Yeah, I haven't drawn it in, but it would be a rising wedge that we are executing right now. Not a decisive move just yet, but working on it. All right, so the S&P, this is the problem I've been watching, are the continual drops below the 200-day EMA. It seems to have found a support level at 28.25. We came down to try and test that. We didn't quite get there, but looking at this, again, another PMO top below the signal line. And, I'm not liking the picture at this point, but we are very near support. So I think it's going to be line in the sand here next week, obviously. We're going to be testing it or falling through it. PMO sell signal, again, that came in today. And we also see that rising bottoms trend line. And again, I could have drawn in the tops here, and that would have given you the look of that wedge. And right now, we are still closing above that 43-week EMA. So it's not too bad. All right, we're hoping our indicators have updated. They hadn't updated at showtime, and it does look like they haven't quite updated yet. Yep, there we go. So I won't talk to these too greatly, but we do know the volume, of course, came in on the very high side negatively on this move down. We saw a really big drop on the VIX, and it hasn't reached that lower Bollinger Band. So that's telling me we could certainly see lower prices continue into next week. And I suspect we are going to see some climactic moves on the net AD and the net AD volume for the day. So you might want to go back and take a peek at that chart. As far as our short-term indicators go, also not quite updated, but you can see we were already getting very overbought with these indicators. On Wednesday, I was feeling pretty good about them. We had gotten a move. We weren't quite there yet. But now, yesterday we got very close to that, the tops we see generally, and that really is generally a harbinger of downside move. But yesterday they still were looking pretty good. All right, and the ITBM and ITVM, we don't have those updated, but yesterday we did get that positive crossover, so intermediate term is still looking okay. But again, I suspect that we will see these indicators turn down below the zero line, although a lot of times they do react a bit slower. I'm going to pass it over to you. I'm about out of time, but I'm just going to quickly show everybody our market indicator chart pack here with the Swenlin trading oscillators. And we have it over here. You can see that we have it for all of these various indexes. And so I thought it would be just sort of interesting. We'll flip through them. I'm not going to really talk about them too much here. There's your NYSE. And as you can see, these are all, they have not updated. And we were still looking at very overbought readings coming in yesterday on all of these. And there's the NASDAQ for you. Also rising and overbought. Let's go ahead. We looked at some of those. Dow Jones, similar situation, overbought. And then these, I think, are very interesting right now because you can see S&P 400 definitely overbought, but the tops aren't right now having to reach that high to get there, just based on the poor performance that we've been seeing out of the 400 and the S&P 600. Certainly overbought yesterday. All right, passing it over to you. Dad, what you got for us?
Okay. Let me try to get the share to go. Oh, it says you cannot, I can't do it while the other participant is sharing.
Oh dear, I'm going to have our trusty producer out there to try and release that so that we can share Carl's charts. Just let me know when that's ready. Let's see. Oh, Rachel's out there. Let's see. Go ahead and try it again. Let's see if that works.
Oh, sorry, Erin. I'm here. I'm just trying to figure it out.
Okay.
Thanks.
Our tech guy's not there. I don't want to release it. Thanks for your patience, everybody. Maybe we'll see if these have updated. I'm going to go back to our DecisionPoint chart list here.
Yeah, might help.
Yes. Crossing our fingers. I'm really curious. I mean, I've been clicking on these all afternoon since 1:10, just hoping. No, we're still not quite there. Try one more refresh. Yep, not quite yet. Let's see. Well, at this point, let's, haven't published quite yet, but we can look at last week's and see, we can look at last week's and then look at the update until we get this together here. I think that's one way to do it. Oh, there it is. That was last week's. All right, so I can click on these and we can get the latest on them.
Okay. Clever. Yes. Okay.
What you got to do?
That's the first chart I wanted to get too. I just wanted to show on this how we started out with last week on Friday, we rallied off of the double bottom situation on Friday. Yeah. And then on Monday, we continued that and up to the confirmation line, which is which I thought it was going to stall at, but as it turned out, it did. With 3 days of messing around, another attempt to go through on Thursday, and then today, of course, I thought it was going to go down, news or not, but we got news to help us go down faster. Notice the VIX, how it basically ran into resistance in the area of the 20-day moving average of the VIX. So that was something I was also thinking was going to happen. If you look back in May, you can see how it's similar attempt to get through the 20 and failed, and you ended up with a more price decline. So at this point, I haven't been able to adjust everything, but to me, it looks like it's pretty. I think we're going to go down more. Let's take a look at the. What else? I'm trying to think what chart we would want to look at.
Probably the UUP.
Yeah, we could go with that.
There we go.
Okay, then you see we're still within a rising wedge formation, massive size, and still we expect that it will resolve to the downside.
And then let me
Let's look
go.
at the weekly on that.
Yep.
This is very clever of you to think of doing this.
Well, you know where I got that from.
Okay, let's see the weekly. We're still, you see the long-term resistance line, which is we're still playing with. Today it closed pretty much right on that line. The PMO has been moving sideways for months, and we really haven't resolved this yet. But this resistance line goes back to 2008. So I'm thinking that the dollar is pretty much done at this point. It's got to pull back some. Okay, let's try the gold. Yes. Okay, well, I was looking at a rounded top going on, and I thought we were going to correct back maybe to the 1450 area. But with today's news, that all went out the window. We didn't really break out of this consolidation pattern, but certainly have got a nice move to the upside today.
Yeah, I noticed the PMO it was about ready to cross.
Right.
It's turned back up.
Okay, the long-term support, you can see where that originates, and the low in 2015 was the end of the gold bear market in gold, and we've gone up almost 50% from that low. Looks like we're getting overbought. So I'm still looking for a pullback, correction, consolidation, or something.
Mm-hmm.
It's going to go straight up. Okay, to the crude oil. Okay, we're still jiggling around here in a fairly narrow range, and I believe that before it's all done with, we're going to be testing the support down there at the bottom of the chart. Let's try to look at the weekly. And again, looking at the basically they're still in a rising wedge formation. I'm sorry, in a triangle formation, and haven't broken down out of that. But again, I think I don't see a lot of upside for crude oil.
No, don't like that sell signal either.
Right. Bonds, I thought they were going to be moving into a correction, maybe half the distance from that top last week. Would be a good target, but today's news had it reversed. I don't know how long that's going to stick.
Oh, I keep trying to do that, and I need to do this.
Okay, this is another reason that I think that bonds are just about done going up for at least for a while until there's another interest rate cut. And you've got a parabolic advance, and it's just the last few weeks it's been, actually 4 weeks, it's been going straight up. And I just think, and you can notice that the 20-year bond yield is it's way down here, almost as low as it was back in 2016. So again, unless there's something other that's going to cause some kind of panicky price movement, I think bonds are probably done at this point for a while. I'm not looking for any great crash or anything, but I think they're probably going to pull back, maybe consolidate for a while.
All right. It appears that our technical problems are going to continue. So if you want me to call up, I know you have the golden cross indicators. I don't know if you have that in here.
No, I don't.
Yeah.
Actually.
But if you know the symbols, I can certainly put it together for you. Here's the yield array if you want.
Yeah, look at the yield. In today's blog, I'm going to be showing I've eliminated everything but the 30-year and then the 2 and the 10-year, and it shows how that inversion we had an inversion between the 2 and the 10-year this week intraday, but they're very close together, and everybody's making a big deal out of it. The thing is, it's these inversions. To me, that's not the news. I mean, okay, it's it gets in the news, but more to the point is that the short rates are higher than the long rates overall. And if you notice, you've got the 1-month T-bill challenging the 30-year bond. Okay, so the fact that it hasn't officially inverted, the 2 and the 10 haven't officially inverted, it's a mess.
Yeah, absolutely. You can just see how things have been traveling and all right, let's see. So what I'm going to do, I'm going to pull up, it is my S&P chart, but actually I'll just pull up one here.
See if those indicators have been updated.
Yeah, exactly. Actually, that's a good idea. We can see if that happened. We have a few minutes. Let's see. Not yet. I'll try a refresh here to make sure.
Must be a problem today.
Yeah, it's just, I suspect it's, kind of a busy high volume kind of day because of what was going on in the markets. So, all right, well, we have about 1.5 minutes left. Is there any chart you can think of you'd like me to call up? I can pull up simple.
XLK.
Okay. Okay, XLK. And I think I have a different one that you might like better. Let's see. Is that closer? Or a weekly. You want to look at a weekly? How about that?
Yeah, I have one and I wanted to show. But basically, you see the last 2 price tops. Yeah, there you go. If you throw the BPI, bullish percent index, up against it, while you have a higher price in the XLK, it's a lower top in the BPI. So there's definitely erosion under that price, and so I think XLK is probably done. And notice, yeah, we got a PMO crossover, so that's also a negative mark.
All right. Well, we filled in the time. We can talk charts. There's always charts to talk about. I do want to thank everybody, especially you, Dad, for joining us today. Please remember to complete the survey as you exit. We love to get that feedback. And as a quick reminder, we do air Fridays at 1:30 p.m. Pacific, 4:30 Eastern. Have a great day.